Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, the Bank of Japan ends its era of negative interest rates, as well as that Donald Trump claims he may need a fire sale to pay for his $464 million fraud judgment. We've got lots to talk about in the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is of course to do with the Bank of Japan. Now, the Bank of Japan has now ended an era of negative interest rates. This comes in a move to raise rates for the first time since 2007, as the country puts the decades of deflation behind themselves. Now, pardon me for my nose, this is a very important article, of course, to kind of highlight here. And it's quite interesting to kind of talk about the Bank of Japan, because whilst we do kind of discuss the Bank of Japan as one of the kind of four most important central banks of the world that we kind of discuss in relation to markets, those being of course the Federal Reserve, the Bank of England, the ECB, and of course the Bank of Japan. Those four banks, whilst they do form that kind of key alliance of those important advanced economies central banks, ultimately I think we focus on the Bank of Japan a little less, and this is arguably just simply because of its time zone. As a result of being, a European, as a result of living in London, the UK, I of course am in the UK's time zone and more closely to Europe's time zone as well. Mainland Europe's time zone, and as a result, I do find myself looking less so at Japan's stock market, and other kind of Japanese kind of indexes and that kind of thing. And as a result, I do often find myself only really looking and highlighting in these market briefings what's going on within these European and British and of course US markets. But here we are talking about the Bank of Japan, and this is because ultimately, we do have a very significant period which is now coming to the end, as the Bank of Japan did now choose to raise rates yesterday to 0%, and this is quite a surprising move, just in the kind of in saying basically raising rates to 0%. It doesn't really sound right, and that is because ultimately the Bank of Japan for the past few years has been implementing the kind of concept of negative interest rates, whereby the central bank actually charges these commercial banks for holding their deposits with the central bank, which of course is in direct contrast to what we've seen within Europe and in the US mostly, which is basically these commercial banks getting paid interest by the central bank for the central bank holding the deposits of those commercial banks. So it is a very interesting topic to highlight here, and of course it will have wide-ranging effects within any Japanese related index, commodity, or currency, but also it's important to highlight for the kind of longer term view on the world's economies, as of course this will have a great effect on the broader changes within the Japanese economy and the future of the Japanese economy. As as we've already kind of highlighted, this also kind of does mark the end of the deflationary era that we have seen kind of exist within Japan, and I think that's something that's very important to talk about, because within Japan, within its kind of economic structure, we do find that kind of deflation process, and that coming to an end obviously will create a great deal of change for just individuals within the Japanese economy, and the way that investors will now look at Japan as a business opportunity. So I think this is super important to highlight. Now, on the topic of interest rates as a whole across the world, whilst the Bank of Japan has held negative interest rates to this point, we of course do know that following the COVID lockdowns, whilst we did see the lowest interest rates that we've ever seen in the Eurozone, as well as Britain, as well as in the US, ultimately, as we've emerged post-COVID, following Russia's invasion into Ukraine. Also, we've seen a great deal of inflation within these Western advanced economies, and as a result, their central banks, have started to implement these higher interest rates, which we've seen the effect of within markets, of course. But as I've highlighted, the Bank of Japan really didn't need to do that due to the deflationary period that they were in. So we've kind of seen this contrast within the advanced economies of the world between the kind of more Western economies of the US, Eurozone and Britain, and Japan. So this is very, very important to highlight, and it's kind of interesting to note, how the Bank of Japan is now raising interest rates, whilst with the Eurozone, with the ECB, and the Bank of England and the Fed, we're talking about rates being cut. So it's a very interesting time indeed. Now, the Bank of Japan Governor Kazuo Ueda has now abandoned a list of easing measures which had initially been put in place in order to help stimulate Japan's economy. Japan's era of negative interest rates began in 2016 in an effort to stimulate spending. We've also seen other nations within Europe, such as in the Eurozone or with Nordic countries and Switzerland, cutting rates below zero, and as a result angering savers, with the negative interest rates serving their purpose in keeping away deflationary threats. That said, the decision for such nations to implement negative interest rates has also had a negative effect on the business climate, with zombie companies surviving as a result. The sign that now the Bank of Japan is moving away from negative interest rates also signals that there are broader changes now taking place within the Japanese economy, with investment flows into and out of Japan now likely to change greatly. The decision by the Bank of Japan was largely influenced by workers for Japan's largest companies, which have now secured their largest pay rise since 1991. Influencing the Bank of Japan to now believe that that inflation will basically stay. Due to the lack of signals for further rate hikes, the yen traded lower after the decision, with inflation now past its peak after rising due to a rise in imported energy and food prices. So very interesting article to note here. Definitely keep your eyes on the Bank of Japan and keep your eye on any Japanese related assets today in the markets. That's all to talk about in this article, though. Next article to talk about, of course, is to do with Donald Trump, who is now being ordered to pay this $464 million fraud judgment. Now, Trump has now said that he might need to sell his assets to postpone the enforcement of the $464 million fraud judgment. This comes following his lawyers declaring that they would not be able to find a company that would be willing to help him secure the large bond. Now, of course, this is not the first time that we've highlighted Donald Trump's legal issues, and of course we've also been covering the kind of Donald Trump versus Biden election race so far already, and in addition to that, we've obviously covered the primaries as well. So, we've been well up to date on the topic of US politics, and I think this is a very interesting topic to highlight in regards to the election. And of course, the election is important to understand, as of course both of these potential presidents, Biden and Trump, both are proposing their own kind of economic policies and their own views on the way that markets and that kind of thing should be handled. So as a result, whoever wins will have a great deal of effect on markets. We know that Trump had a very volatile effect on markets with his tweets and large kind of persona. Whereas with Biden, we've seen this kind of more calm personality within the White House. That said, there's been certain unease over his ability to kind of prevent these geopolitical issues which have now flared up during his presidency, and we've seen the kind of issues come about with that, and as a result we've seen the effects in markets such as gold and oil as a result of those geopolitical issues. So certainly both of these potential presidents have a great deal of effect on markets, and I think this is an important article to highlight in regards to whether this may now affect Trump's ability to run within the next election, within the 2024 election, and whether this is something that could also weigh on voters' minds when they head to the ballot boxes in November. So very important article to highlight here, and I think all things US politics at the moment is just too important to miss out, as we're now in the lead up seriously to the 2024 presidential election. And as I've already previously mentioned, of course, that will have a great deal of effect on markets. So keep your eyes on all things US politics and politics as a whole. As we do know, that has an effect on markets in general. With Trump since Monday this week attacking those that brought the case against him on social media. Trump once again accused the trial as a witch hunt and election interference. Trump said that the bond required was of such a size that it would be nearly impossible for any company, even one as successful as his, to cover it. He also said that the verdict would now make existing businesses flee New York. Trump and his businesses were found liable back in January for committing what was described as blatant fraud in inflating the value of his real estate. And this was basically to secure cheaper loans, which he then used in his business. That said, he did pay them back, which is where the controversy kind of really has formed on this issue. Now, the judgment exceeds $464 million, including interest, and can be collected by the New York Attorney General unless Trump posts a bond for the full amount whilst he appeals. So, very interesting article to highlight here, and it'll be certainly interesting if his words do come true in regards to businesses fleeing New York basically as a result of this kind of judgment. But it's hard to tell how much of that is reality and how much of that is kind of his political kind of efforts to slander whoever is basically in leading New York or is in power within government. So definitely keep your eyes on things in US politics, as things could get very volatile in the lead up to November. That's all to talk about in the articles as a whole, though. Next to talk about, of course, is the US 30, talking about the charts. Pardon me, I should have said the charts is where we're starting off. And of course, we're beginning with the US 30 on the charts. And that is largely because, of course, we do find the US indices the most important to kind of always get out the way and understand early on. Now, to begin with, we are on the US 30, as I've said many times now, with the US 30 taking a jump to the upside yesterday, it seems, just as a result of data being released and just bullish momentum once again entering the market. As 2 days back in yesterday's market briefing, we did highlight, of course, that price had retraced down to this 78.60 Fibonacci retracement level, and so we did highlight this as an area where there was likely going to be a great deal of bullish support in there, a great deal of bullish liquidity, and we expected therefore run to the upside at least was coming in some sense. That said, we were kind of apprehensive because we do know that we're getting a great deal of US data this week. With today, we're getting not only some US mortgage data, but most importantly the Federal Reserve's interest rate decision and their press conference, which of course will have monumental effects on US markets. And so we can definitely expect a great deal of volatility coming from that decision and the talks afterwards. So that's why we were kind of hesitant in saying that we were going to see a great deal of bullish momentum emerge from that 78.60. That said, it does seem like we did find that bullish momentum, and our price is sitting quite near previous highs and all-time highs. So definitely keep your eyes on the US 30 today, as we are getting a great deal of US data. Next to talk about, of course, is the dollar. A kind of repeated message can be said here in regards to what we've just said about the US 30, as price also on the dollar did rise yesterday and push above this 78.60, which we did kind of highlight as the last line of defense for the dollar, with price breaking above this liquidity zone and also breaking above this Fibonacci retracement level. So a very key level which price is now broken, and because we're getting this Federal Reserve interest rate decision today, of course it's important to kind of look for areas where banks and other financial institutions have layered their hedging positions in line for this decision, but it's kind of hard to note any key areas because price hasn't really ranged in the lead up to this decision. Instead, prices kind of made up the losses which were seen on the dollar since the beginning of March. So since March, prices fell to the downside for the dollar, but since then has risen back up to the area where it started with in March. So very interesting price action for this month on the dollar, of course. Next talk about though is the Euro USD. We know we're getting a lot of Euro data this week as well, and we already have, but of course today we're having the Federal Reserve's interest rate decision as I've highlighted, and that of course will be affecting the Euro greatly. Interestingly though, yesterday price came into contact with this 78.60 Fibonacci retracement level, that last line of defense on the Fibonacci retracement tool, and we have seen a bullish reaction from that area, so we could definitely be expecting a continuation to the upside today, depending on of course the ECB President Lagarde's speech today, as well as some other Eurozone data, and most importantly that Federal Reserve interest rate decision. So very important data which is going to affect the euro as well, and a very interesting position that the euro is currently sitting in. Next talk about though is pound yen, which has seen a great deal of bullish momentum entering the market despite seeing an interest rate rise in Japan. And this is of course because we're not seeing any further rate hiking opportunities with the Bank of Japan. So markets had already priced in this rate hike quite long ago, as this was kind of widely expected, but the key thing that we were expecting to see should the yen gain any momentum is those further signals that rate hikes were to come further on the yen, but we haven't seen that, and as a result we have seen a great deal more of kind of liquidity and bullish momentum enter the pound against the yen rather than the yen against the pound. So as a result, we've seen pound yen shoot to the upside yesterday following those that decision by the Bank of Japan, and therefore invalidating this key technical opportunity of the 61.80, which we did highlight as an opportunity should the Bank of Japan's interest rate decision line up with that technical opportunity. Next to talk about though is Bitcoin, which of course has been in a very interesting position recently, making all-time highs, but since mid-March, since the 13th of March last week, exactly a week ago, prices started to trend to the downside. Possibly this is just retracement, as prices now come into contact with that 78.60 Fibonacci retracement level that we've highlighted previously as a very key area for price to come into contact with. So it'll be very important to see now whether price will see a great deal of bullish momentum enter the market. Pardon me again for my nose, after coming into contact with that level. That's the key thing to look out for now on Bitcoin. If price breaks lower than that, we definitely could be seeing price make a further run to the downside, as it makes up a lot of this kind of market inequality. Next to talk about though is gold, which is just continuing to form this bullish flag despite the kind of bearish signs that I think are kind of within the market. So a very interesting position for gold at the moment, and I'm just expecting to see a large move today as a result of this Federal Reserve interest rate decision and this very key technical opportunity that's formed on gold. So definitely keep your eyes on gold. I think that's the most important out of the kind of US dollar, US equities related assets. Lastly to talk about in the charts though is oil, which is just continuing to push higher and is nearing that $88 a barrel figure. That's all to talk about in the charts though. Lastly to talk about of course is the economic calendar. We're getting lots of data today, but I'll try and get through it quickly. Firstly, we're getting the Aussie inflation rate expectations figure, followed by a very important British figure, which is the British inflation rate figure. So that'll be affecting pound yen lots. Next to talk about though is the ECB President Lagarde's speech. So important ECB rhetoric there to listen out for, followed by the Italian industrial production figure and the Spanish consumer confidence figure. So two very important Eurozone figures. Followed by that, we're getting the US mortgage some US mortgage data, followed by the Eurozone's consumer confidence figure, and most importantly, today we're getting the Fed's interest rate decision and press conference, and that is obviously also including the FOMC economic predictions, and finally we'll be getting the Aussie manufacturing and services figure. That's all to talk about on the economic calendar, though. We've covered lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day today, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.